old girls and coached Team 6, the blue team, Lutherville Soccer, in my debut as head coach of a soccer team because one of the other coaches backed out. So that's good. And that is going to be part of your free entertainment for the next 8 to 12 weeks as we move deeper into the year. All right. So digging into today, you obviously know what's going on. We have, obviously, we'll talk about momentum as we do every single day. We'll talk about the top trader stories at the macro level. And then at 9 o'clock, you get the runner. And we've had some nice runs, nice wins, nice moves on this. But as we set up for momentum into the Fed meeting today, a little bit of caution, and I'm going to walk you through some of the math behind it because this is actually one of the more rare times that we see pure equilibrium in the market as we move into a major event. And then, of course, how to react. How are you going to be trading this, by the way? We better call in Gianni. Yes, please. Let's please call in Gianni. I have a Greek guy who has never coached anything and doesn't even actually understand the rules of soccer, who is my now assistant head coach. So this will be quite a season. And getting to the championship, probably not going to be in the cards. But it's not about winning. It's about the friends you make along the way. All right. Why are you joining us every day? Stocks that are actually worth engaging, and this is a tough day. There's a lot of information that's going to be coming on. In addition to that, whether the market is even safe to trade or if it's a trap day, this is going to be one of the harder days to trade in recent memory, and that's why you need a lot of guidance, and that's why we encourage you to be in the room with us all day, 11 o'clock on the meeting time. We'll talk you where the smart money is moving at the moment, and then, of course, top screens, top stocks, top trade strategies of the day. On the momentum side, this is an unusual one because I rarely have setups that take me to a point where we're basically at equilibrium in the market. And as we look at this, remember, we're looking at the number of stocks that are breaking out versus breaking down in every one of these indices, taking all the stocks and all the indices on a bell curve and looking for whether or not they are in very specific conditions in terms of how they have moved over the last week and last month. And right now, we're pretty break even on the S&P 500. The poor man's version of this is -5. The intraday version is what you're looking at. On the daily, weekly, we're effectively at like +1 on the S&P 500. Meanwhile, with the Russell, we are flat as well. So one of the things to be paying attention to is just the basic fact. If you look at the SPXL, the leveraged ETF around the S&P 500, RSI, MFI sitting in the flat 50s. It's right here, right at the simple moving average. Everything is hovering right at that key line. And I highlight the importance of the simple moving average and exponential moving average because it takes a lot of money consistently flowing in to ensure that it is above that moving average. It's a key 4 week gauge of whether or not inflows are coming in. And now as we set up for today, the question is, are we going this way? Are we going this way? If the market blows down, well, we're going to retest the 50-day moving average of the S&P 500 is my guess. If we just get a nothing burger, we're going to start to move back up channel, and that's kind of where we move toward that 653, 652 level. Just pure momentum that are going to rotate, and we'll set up for the rest of today and for next week. Now, as I have said, it is a Friday, so there are lots of options expiration today, which is why I continue to advise that people learn to trade volume-weighted average price. Volume-weighted average price is a 1 minute, on the way we're doing it, 1 minute indicator tied to institutional price. These bands are deviation bands. So first deviation of 1 minute standard price, second deviation of price, third deviation of price. This acts as like a magnet. Institutions focus their buying and selling around that as they enter and exit for longer term moves on stocks. And what we have seen when we talked about that Stanley Druckenmiller statement from 2018, the deviation bands have largely led to reversals because algorithms will immediately start stepping in and punching people in the face if they are trying to short down into the bottom of the third or even into the fourth standard deviation. Why does this matter? Because if you see a big broad sell-off today on the SPX, S&P 500, and we get down into the fourth standard deviation, you are looking for a snapback quickly. And the way that we trade this, you can obviously trade the SPX, the ES, or you could trade the SPY, looking to stay in the money and looking for some sort of move back toward volume weighted average price, or at least to the midline within the Bollinger Bands that I have layered on top of this. This is pure reaction, and that is what today is going to be about, reaction. So a high focus on where price is at any given moment. Hopefully we see an uptick in volatility. Hopefully we see these bands expand, creating opportunities for wider ranges and the opportunities for people who know how to trade this right now, how to take advantage in the event that we get a big overreaction and then trading a snapback in a very, very short period of time. Okay? I don't care what Don says. Don't say that. That'll get you banned. Okay. Powell's at Jackson Hole. I don't know if you heard about this. There's this guy who runs the central bank, and he was in private equity for a very long time. And he really wanted to get into the magic of central banking. So he joined the Federal Reserve, as one does. I dreamed of hitting a home run out of Yankee Stadium. My brother would, give an Oscar speech into the mirror. This guy wanted to stand in front of a room full of people and talk about wage inflation, and boy, did he nail it! So good job, and really, really wishing you a lot of luck today, Mr. Powell, on your speech in Jackson Hole. That, if you don't know, the Jackson Hole Symposium is an annual event. I believe this is the 48th or 49th of them. It's a bunch of people standing around studying, talking about nerdy academics, talking about financial papers and making submissions about the labor markets. And it sounds boring because it's intentionally made that way, because major policy shifts are born out of this conference. A lot of financiers, a lot of central bankers from around the world gathering to utilize fishbowl economics for the purposes of directing all of our lives. I remind everybody that the people who are at the Federal Reserve have more power over you than any president ever will, because they impact the money that you work for and the prices that you pay. So why does this matter today? Because we know that the United States debt situation is very ugly. We have $37 trillion in debt, and we are fighting inflation at the exact same time. And while the Trump administration would love for the central bank to cut interest rates, Powell is concerned about inflation tied to tariffs. The big story today is really the Machiavellian element of what Powell wants. Does he want to be feared, or does he want to be loved, a la the prince? And the idea here is, if he wants to be loved, he cuts rates in the face of possible stagflation, if not inflation, that reignites debates about inflation waves in the 1970s. But if he wants to be feared, he wants to maintain the Fed's independence. And that will send the market into a rage. So we are going to analyze the color of the tie, the briefcase he carries, how thick the speech is, whether or not his shoes are tied properly, everything that these people talk about as we lead up to this to try to assess it. They are turning it into what feels like a FanDuel props bet situation. New business idea, Don Kaufman. Federal Reserve prop bets, part gambling website, part trading education. It's like Kalshi, but for fashion. Momentum is right at equilibrium. Key tickers are the SPY, the NASDAQ, the TLT, and the VIX. Of course, I know that Don is going to be watching the UVXY today. Why would he not be watching the UVXY today? Because volatility is where he swims, and we are looking for the UVXY to start to break out. I remind you, this is typically a pretty broken product, but when this thing wakes up, it wakes up. Same thing happens with the FNGD, which is my tool, because the tool that I focus on here is I'm looking for leverage to be unwinding in very highly held, tightly followed, herd trade like bang stocks. Okay. So if this starts to break above that 50-day moving average, that's where I am going the opposite way, and I will start shorting the S&P 500 using calls on the SH and start buying SPY puts and maybe speculating with some of the more leveraged ETFs. It will be a fun day for individuals who enjoy macro trading. Rate cut expectations have dropped precipitously. They've fallen. It's kind of like the idea that if you put Brock Lesnar in a cage with Miley Cyrus, odds are going to be pretty high he's going to win. But you put a shotgun in her hands, odds are dropping pretty quick. NVIDIA, H20, a chip pause, watching NVIDIA because, again, this is the more to just the idea that you sit around and you look at the current situation with the macro. NVIDIA does have micro concerns as well. They're asking suppliers to halt the H20 AI chip production for China. There are security concerns tied to the revenue sharing rules that prompt the pause. The stock's kind of been dragging. This is important because, again, like on the macro side, you have NVIDIA under pressure because of the Mag 7 and the potential deleveraging, but now you have a macro issue. And if NVIDIA starts to go and you combine the micro side and the Fed, this thing can turn around and really start to break. This 50-day moving average for NVIDIA is going to be absolutely critical. Otherwise, this is going to take the rest of the semiconductor stocks with it. SOXL currently hovering right at its 50 and its 200-day moving average. If this flips, I will be going long SOX or any of the inverse ETFs that are linked to semiconductors. The expectation being NVIDIA, being the bigger dog, will take the rest of the pack with it. All right, last one before we dive into anything else. Here we go. EM flows, just some big, lots of words for you all on one page because that is what I do, delivering that value every morning. The macro landscape is nuanced while markets wait for Powell. Pathfinders hint at cautious positioning. Emerging market inflows continue as investors seek yield and growth behind U.S. saturation. I've been talking about India. I've been talking about a lot of these other emerging economies. If money needs to flow out of the United States today because of Powell, pay very close attention to emerging markets and recognize that there are other nations out there that will gladly take their money back if they cannot find a solid return here. Oil prices are rising at the moment. They're reflecting tight inventories and demand optimism. Energy has been very, very difficult to trade in the last couple of weeks. We've seen a lot of sideways moves, and I've been trying to focus on around this 20 and this 50-day moving average. I've had situations where I've been up on a trade, and then all of a sudden we're getting a snapback, so like I end up breaking even. The key thing to keep in mind here is we're just watching around this 50-day moving average on the OILU. If we could break above it, long companies like Apache, long companies like Devon Energy, if we start to break under it, high beta upstream oil and gas companies that react to broader oil prices. We had a couple of days sell off, then we turn around and we start to gain again. I think a lot of this has to do with Jackson Hole and expectations. A lot of focus on the commodity side. EM flows will continue to shape broader market sentiment. Oil strength can help with upstream oil and gas and industrial plays. But again, at the end of the day, it's a real big focus on whether or not U.S. asset valuations are impacted. Watch the EEM, the VWO, which is the emerging market ETFs, the XLE, and the DXY, because the dollar, which will be impacted heavily today, will be in focus. I remind you that if you want to trade the momentum of the US dollar based on today's action, you have the UUP, which is a cheap way to trade it. You can buy at the money calls and out into September, and it's not going to cost a lot of money for time. It's going to cost just a couple of cents to control 100 shares. But this is a momentum-based trade. If Powell holds strong today, we are going to move much higher, possibly up to the 28 level on the UUP. If he capitulates, well, we start to revisit a downward trend in the US dollar, which lifts a lot of boats in the process. All right. I had water here, and now I don't. So tough luck. That means it's 9 o'clock, and we're going to do this. We're going to do it. All right. As we talk about every day, we give you the runner at 9 o'clock every day, and you have to be here from 9 o'clock to 9:20. And if you're not here, well, you don't get it. I'm sorry. Them's the rules. I didn't make them. I was just born into them. Bane? Did I just quote Bane? I was born into darkness. At 9 a.m., Garrett drops the master list, breakouts, breakdowns, momentum setups, define the first trades of the day. And there's some strength out of China overnight with Beijing hinting at yuan-linked stable coins because why not? Why, if we're going to make money up, let's really make money up and let's tie it to the yuan. I can't think of a better place that I want to park my money than some sort of invented digital currency in the yuan, which is being devalued on purpose. Somebody was talking about how stable coins were the future on LinkedIn the other day. And then somebody also pointed out in the same thread that half of people in Nigeria don't have electricity. So how are they going to use Chinese stable coins? I don't get it. I'm not worrying about it. I'm going to focus on things that actually matter. And I'm going to focus on the things that people need and people want and where it is flowing and why. And Philip Morris takes us right there. Smoke them if you got them, everybody. It's going to be a long day. For Philip Morris breaking above this key moving average. And I continue to argue over and over again. This is a very well-run organization in a world where I don't think I've ever needed a cigarette more. Above the 50-day moving average, 170 strong breakout, strong momentum, continued momentum, looking for this to continue to fly higher. This is a very good business. I don't care about what it is they sell. I'm just trying to trade the flows, and I'd rather sell cigarettes than cryptocurrency, to be very honest with you. So looking at the 174, looking at the 170 level, something like that, looking for a spread because again, we're looking for stocks that really at the end of the day, who cares what Powell does? This is nicotine. So if I'm looking to play a spread on this, it's a relatively simple way to do it. We look at PM. And by the way, we're going to get 750 advertisements on Option Profit Calculator. Make sure that you check out all of our new sponsors, apparently, on our show. So from here, we're going to look to buy. Oh, my goodness, make it stop. We're going to look to go out to September 5th. And Philip Morris must be having earnings coming up. One moment. PM earnings date. So I'm just trying to play momentum. I'm not trying to get too in the weeds. October 20th, this says. So you just got a lot of speculation right now around this meeting. PM currently trading at 174. So what's the clean way to continue with momentum on this? How about we go out to next Friday? And let's try this. The 170 call for next Friday. Go just a little bit out of the money on the 175. And here's what you create. You create a trade with a 60% probability of profit. Your goal here is 70%. I'm going to show you exactly where to get out of this. Tight stop, right? Tight stop. We're looking for the 50 and the 200 to continue to run. But for continued momentum, the stop here is going to likely be right back at your break even. So 173, right? 13%. And then let it bleed off. I know this is a tight stop. I get it. That's the point. Because I'm trying to trade momentum and I'm not trying to lose the house in the process. In the process. Trying to just look for the continued breakouts. 170 call for next Friday. 575, it's going to be a little higher. 175 call is what you're writing. Just setting a line in the sand. 70% return. Your break even's back at 130. If you want to go with a little bit more of a deeper cut on this, you can go down to that 172 level. That's where you're probably going to see the 20 and the 50 start to provide a little bit of support in the next couple of days getting into next week. So that would be your exit strategy. And at that point, you want to keep a tight stop here. But 25%, not too bad. And then you're looking to bet $1 for every 2 that you're trying to make. So 50 to the upside, maybe even higher than that, depending on the momentum if it continues. And set a stop back here. But that's the idea of the day, trade of the day. For an idea, looking for something to continue to run. That is why we call it the runner. Ooh, look at that. Shipping's doing pretty well, by the way. ASC is kind of, hovering in the winds. ASC is a great company, by the way. I'm a little stunned that it's beaten up the way that it is. This is one of those stocks that has a very young fleet and has a lot of upside opportunity. Been focusing on it, obviously, since coming off that 50-day moving average, but now seeing if it can hold above that 200-day moving average. This is a company that focuses in the world of specialty chemicals shipping. Very young fleet. That is a huge advantage for them because a lot of companies in the global shipping markets are going to be seeing their ships need to be replaced in the years ahead. I think the average ship that they have is somewhere around like 8 to 9 years old. So Ardmore, cheap company, good momentum. A lot of these other shipping names are cheap as well. TK is showing up on the list as well. And we talked about TNK as well, TK Tankers. So some strength there. Keep the tight stops tight. I like Philip Morris out of the rest of it. On the breakdown, PII, what do you do? Polaris, consumer cyclical. Well. What do you do? Well, we sell automotive manufacturing, right? Off road, Medina, Minnesota, quad bikes and four wheelers. And I got to point something out. I got to ask that very important question in the state of the economy. We just saw Lazy Boy get its head kicked in. And the argument that I was making was, look, if people aren't buying furniture, how is the consumer doing? Well, consumer cyclical, consumer recreational, breaking under that 20-day. You don't need to go far here on a stock like this. You're just looking for continued weakness, and you want to do the exact same thing to the downside that I was discussing. You're just trying to play a very short amount of time on a stock that is under pressure. And this is going to be a tough day, right? This is going to be a reaction stock because in the event that Powell is soft on the market, then Polaris will probably do well. It's consumer cyclical. But if he comes down hard, that impacts consumer spending, that impacts consumer debt. PII can break down pretty quickly. So two different ways to trade this and keep your eye on it today. If we start to see Powell really lean in, then the first thing is if you break under that 200-day moving average, that's going to be a key support level. But if it breaks further, it's going to move down to that 50. That's your next support level. If Powell comes in and we are soft, stay at the money, go out a week, keep a tight stop, and see if we start to revert back to the recent highs of that $60 level. This day is about reacting. Very important. Riley, oof. Forget that the stock's even around. Isn't this a Coyotes short? Didn't he go like nuclear on this stock? Yikes. 200-day moving average. This breaks down. You've got to move from about 560, probably pushing down to that. I mean, you might be going back to 3. This is not doing well. This is just not doing well. So completely unprofitable, very beaten up, losing tons of money. And you start to break under these key moving averages, you see the damages that happen. $1, $2 on a stock like this, you can do a lot with that. So if we break down, next move 5, we break under that, you're coming back here to 3. Add it to a watch list. On the momentum side, Chinese tech, K-Web, right? K-Web, always back in focus. And then the shipping stocks looking relatively solid. On the breakouts, we continue with the healthcare side. LABU, interest rate cuts today or interest rate cuts in September and softness moving forward. Very good for biotech, largely because so many of these companies are operating on cash burn. So watch the LABU. Watch what's going on with the staples because, again, a lot of the companies we've discussed in recent weeks and months, they have financing issues, inventory issues. That's going to be a big question moving forward, but staples are holding up. Tech, communications, and discretionary are under pressure, and energy continues to rotate. All right, real quick. Looking at what we got. High short float on Riley. Well, let it go. How about that runner? Did you not come through? Oh, I have no idea what Ed Mines is talking about sometimes. Yeah, okay. Is there a Q&A after J Powell's speech? I don't believe there is. It'd be awesome if it were. I would imagine that's a great question. I don't remember there ever being one. Today might be the day. Let's see. There is no Q&A. He is scheduled to speak at 10 a.m., not 11, on the Economic Outlook and Framework Review. The speech will be live streams on the Kansas City Fed's YouTube channel, right up there with all of those great channels that my daughter makes me watch of kids plugging in their phone in very unusual ways. Ugh. Joe brought up ET, and that's exactly where we're going next. So what's the deal here? I talked about this yesterday at the end of the day. I talked about the fact that when it comes to this environment, when it comes to this market, I am looking to take advantage of what sovereign funds are doing. I don't want to own debt. I want to own physical assets. That is the play. That is the next 36 months. That is the great money grab that we are witnessing. I have compared this whole situation to what feels like post-Berlin Wall Russia, where it's like, let's get as many assets into our hands as we possibly can and as quickly as we can. Hate to say it, but we are in the middle of one of the weirdest economic environments that I've ever operated in. And the idea here is, look, you want to, if we're going to move back to 18th century mercantilism, you want to own real assets. Energy Transfer is a pipeline company that owns 125,000 miles of pipeline around the United States. And why is that good? Well, it is the circulatory system of our energy side, and it will power everything from AI to homes, because natural gas is the most powerful and best bang for your buck when it comes to natural gas energy production. To put that into perspective, I was pointing these numbers out yesterday. If you wanted to power 2.8 million homes in the Northeast, you can do it with windmills, but you would need to use all five boroughs of New York to do it. If you wanted to power it with solar, you would need the entire island of Manhattan. If you wanted to power it with nuclear, you would need half of Central Park. And if you wanted to do it with natural gas, a natural gas plant, you would only need 6 square blocks of the city. Bang for your buck. Energy Transfer, again, Kelsey Warren is the guy that I've been paying attention to since 2021. This is one of the largest insider buying campaigns of the last decade, following only Dustin Moskowitz, I believe. He was buying the stock at $9.35 back in 2021, and he's still buying tens of millions of it at $17.34. Kelsey Warren, I salute you. ET is a stock, full discretion, that I own, and I own a relatively sizable position in it. On top of that, that's the point on the intermittent. You have to, you would need a lot of batteries too. On top of that, you have Joy. This thing keeps coming back. This is one of those names that we see quite a bit on our F&Z score stocks. Very good opportunity here to just simply stay at around that $50 level and let that be your stopping point. JOYY. Let's look at a call. See if we find anything here. Camel. There we go. Widespread. Very widespreads. So you would have to do limits on this. I could just buy the stock and just set a stop right back here at 50. Just see if we can get a move up to one of these retests up to around $55. GSL, again, continued shipping momentum. We've talked about that a little bit. This is strong, but again, pushing at that 20-day. And then Boeing, there was a rumor about a big Chinese order. I don't know, but there also is some insider buying activity to this that I thought was relevant and wanted to bring it up. BAA, big, not a huge move, but a director buying $500,000 in stock. And as I always note, pay attention to where there's a rare purchase within a company. It's a rare buy on Boeing. We don't really tend to see a lot of people doing SEC Form 4 documents on this, but rumors of a Chinese order, we'll see if that's necessarily true. But looking at BAA currently, just sitting here at this line, if we break above that 20-day moving average, that will be a momentum level. All right, we got 5 minutes left, which means I need to just remind you about what to do today. You know, it's very, very difficult to try to guess what the central bank is going to do. And we have seen, obviously, the market move and react in very violent ways in the last couple of weeks when it comes to expectations for rate cuts. CME FedWatch is a tool that you can utilize just to see what the market is priced in as far as probability of a cut. Remember, it was just a couple of days ago, maybe a week and a half ago, we were talking about 99% probability, and then that has weaned off. And on the average of the last week, on the 15th, last Wednesday, we were at 85%. Today, we're at 70%. And look at where we sit in October. We were above 50% at one point a week and a half ago on expectations of a move 50 basis points. And now we're down to 31% for even that, and barely above 50% for a rate cut in October. This is one of the things that I continue to remind people. A lot of this is theater. A lot of this is noise. A lot of this is dressed up. Interest rates are not the cost of money. I want to remind people of that. Exchange rates are. Forex is. That is the real exchange of money, because in the event of massive exodus of capital out of the United States, interest rates aren't going to matter that much, because the dollar's valuation will have taken a huge dive as a result. As you look at this, you see a 16% chance that we don't even cut. And if you look out in December, a 4% chance that we don't even cut. That's where we are with concerns around inflation, and the bond market is showing this. The short end of the bond market, 3 years, very, very low yields, but is that 10-year that continues to hover at around 4.3%. And the concern is the long-term issue around our debt. And as I've said time and time again, I don't care what they say today. I care what they do. And overall, you have to set your expectations beforehand, and there's one of two ways that this market can operate. It can either rip higher because Powell has effectively capitulated the independence of the Federal Reserve, or he holds the line and he tanks this market, and he does what he did in 2022, and he doesn't give the pain speech, but he gives the hint that there will be no relenting on this under his watch until the end of his term. And that term is in mid-2026. And then at that point, they can do whatever they want. They can turn it into what happened in England, and they can start to run in the stagflationary environment. That said, this is becoming very political. It is becoming very noisy. Watch the first 15 minutes. Look for a reversal. Focus on the key tells of the market. Focus on the technicals, and don't chase the headlines. Focus on the price action. Learn volume-weighted average price. We put tons of videos about this. I've been talking about it for months. Again, understanding that there will be overreactions today, and those overreactions, when people are panicking, become your opportunities to sell. There may be these manic moves to the upside. They're going to lead to reversals. And you just have to be patient and move through this day and react to the way that money is moving. If you try to guess in this environment, and you try to guess what's going to happen next week, that's a challenge. You have to have conviction. You have to say, based on this, I am doing Y. And that's one of the things that we constantly strive to do here. We are focusing on trying to teach you not only the tools, but also to have the conviction to make the trade. I am short ARK Innovation Group right now. I am long Energy Transfer. And if they tank this market, I am long a large number of capital efficient stocks and capital efficient assets that I will hold through this period, because as I've noted, it's most likely they're going to have to turn the taps back on at some point soon. They're going to have to move to QE. They're just not going to call it QE. They're going to have to finance this economy through short-term treasuries. They're going to have to continue this process to ensure that the hedge funds don't blow up, because they don't want it to happen on their watch. They don't want it to happen on their watch. They don't care if it happens in 2027. They don't care if it happens in 2029. They just don't want to be remembered as Artie Burns. Powell speaks at 10 a.m. So, at the end of the day, focus on the stuff that has value. Continue to look at assets that will kick off cash that you can actively trade. And before 10 o'clock, my final ask for you is to look at your stock portfolio. Look at your stock portfolio. Is there something that you purchased in the last year that is underperforming because you saw it on some presentation and you bought it on a speculative bid? Is it underperforming, and is it a bad company? Does it have terrible metrics? Get rid of it. Move it to something that actually kicks off cash and produces for you. Don't sit around and wait for these things to rebound. Preserve your cash now and put it to work when it is time. Focus on the things that matter. Don't speculate on these crazy off the wall concepts. Instead, focus on companies that are capital efficient, focus on assets that are efficient, focus on gold and silver due to higher monetary policy, and use the cash that you can take today and trade it actively. Okay? It's 9:21. Don's coming up in a moment. I hope everybody has a great day. Tony is sending us a note saying, buckle up, boys. He's ready to roll. It's going to be a fun day. I will be back with some commentary in a little bit on the Fed speech. And then I am back at 3 o'clock to close out the day. As always, I hope everybody has a great day. See you in a bit. Don's coming up right now. Take care.